Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate speak to find the juicy truth. Tonight we're looking at a filing from Remora Capital Corporation, and let's just say they've been busy bringing in some new cash. So what exactly is this filing all about? Well, it's a current report, which means something pretty important happened that the company needs to tell the public about right away. Think of it like a breaking news alert in the corporate world. And the company we're diving into is Remora Capital Corporation. If you're not familiar, they're a player in the financial world. Companies like this often deal with investments, and their actions can tell us a lot about where the economy might be headed. Now, usually we skip over the boring contact details, but it's good to know they're out there. One thing that stands out right away is that Remora Capital is identifying itself as an emerging growth company. This status comes with some perks, like being able to delay adopting new accounting standards, which can sometimes make their financial picture look a little cleaner for longer. It's not necessarily a bad thing, but it's something to keep in mind when you're looking at the numbers. They've also elected to use the extended transition period for new accounting standards, meaning they're taking full advantage of that flexibility. The main event in this report is clearly about a sale of stock. Specifically, it's about securities that weren't registered with the usual regulatory bodies. This usually means they're relying on exemptions from registration, which are designed for certain types of transactions. So here is the kicker. On the 2nd of February of 2026, Remora Capital sold a whole bunch of their stock, specifically over 627,000 shares, and they got a substantial amount of money for it, over $6.2 million. That's a pretty significant chunk of change for any company, especially one that's calling itself an emerging growth company. How did they do this? Through something called subscription agreements. Basically, investors agreed to buy the stock directly from the company. This is a common way for companies to raise capital, especially in their earlier stages or when they need to act quickly. And why weren't these shares registered? The filing states it's because of Section 4(2) of the Securities Act of 1933, along with Regulation D. This usually means the sales were made to a limited number of sophisticated investors who are deemed capable of evaluating the risks involved without the full protection of a public registration. It's a way for companies to raise money without the massive expense and time commitment of a full registration process, but it comes with conditions. No underwriting discounts or commissions were paid, meaning the company kept all the money for itself, which is great for them. Now let's think about what this means. Raising over $6 million is a significant event. For an emerging growth company, this kind of capital injection can fuel a lot of things. It could mean expanding operations, investing in new technology, making acquisitions, or even just shoring up their balance sheet for tougher times ahead. This type of share issuance, especially when it's exempt from registration, often suggests that the company is moving quickly to capitalize on an opportunity or meet a pressing need. It's not the process you'd see for a giant established corporation looking to raise billions, but for a company like Remora Capital, this is a big deal. It signals growth and ambition. We don't have detailed financial tables in this particular filing, which is common for an 8K focused on a specific event like a stock issuance. However, the crucial piece of information here is the influx of capital. $6 million is not pocket change. It's enough to make a real difference in the trajectory of a company, especially an emerging one. Looking at this filing, Remora Capital Corporation is clearly in a growth phase. They've successfully raised a significant amount of money by selling their shares directly to investors, bypassing the traditional public offering process. The use of exemptions under the Securities Act suggests they've found a way to efficiently secure funding, likely from private equity or venture capital sources who are comfortable with less regulated investments. The implication here is that the company plans to use this capital for significant business activities. Without more context through their regular financial reports like a 10Q or 10K, we can only speculate, but it's reasonable to assume this funding is tied to expanding their market reach, developing new products or services, or perhaps strengthening their financial position to attract further investment or prepare for a future public offering. A key point is that they are an emerging growth company. This means they are likely still building their infrastructure and market presence. This injection of funds could be the catalyst they need to accelerate that development and become a more significant player in their industry. Risks to consider with this type of unregistered offering include the fact that investors may not have had the same level of information as they would in a registered offering. However, the reliance on Section 4(2) and Regulation D implies these investors are sophisticated. Another risk, though not directly stated in this 8K, is the potential for dilution of existing shareholders. If this new stock issuance significantly increases the total number of shares outstanding without a proportional increase in company value. Ultimately, This filing tells a story of proactive capital raising by Remora Capital Corporation. They are demonstrating a clear intent to grow and are securing the financial resources to do so. The specific use of these funds will be key to watch in their future filings. Alright, that is our quick dive into Remora Capital Corporation's latest announcement. What do you think of this significant capital raise? Does it signal strong future prospects or potential challenges? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a like and subscribe for more unfiltered corporate insights. And don't forget to join our Discord community, linked in the description for more in-depth discussions and to connect with fellow corporate explorers. Thanks for watching, and I'll see you in the next decode.